Hey everyone, this is Ryan Mallory for SharePunter.com. Doing a Google Hangout with you guys today on this Friday, February 20th, 2015. Um, it's been relatively a quiet week. Obviously, you had the follow through on Monday that was worth a few points, and then Tuesday, Wednesday, and Thursday we had the sideways consolidation at the highs, which is good. I mean, we weren't necessarily moving up. Obviously, we'd like to move up every day, but being seasoned traders, we all know that the market doesn't move up every day, and the more it moves up, the more chance there is of a hard pullback. So, getting a little bit of a breather for the past 3 days without giving up much of those gains was a welcome treat for the market. And so what you ended up having here was a bull flag formed over the last 3 days, healthy chart pattern. And then today you had a heavy break below support here in the 30-day moving average over here in the left-hand corner, bottom left-hand corner. Price moved below this key support level. I did not want that to happen. But the good part is that on the 30-minute chart, despite finishing below it, it actually recovered quite nicely. And when I say quite nicely, that is an understatement, as the S&P has literally been up like 8 or 9 straight bars on the 30-minute chart. So basically, since the opening price that the market provided us with, the S&P has been up every 30-minute bar since then. Now, of course, getting a little bit of a hesitation here, but I mean, come on, is that like all that surprising when you've rallied 1, 2, 3, 4, 5, 6, 7, 8, 9 bars, and now it's 230, so we're starting a new one. So 9 official bars on the 30-minute chart have finished higher. So yeah, I mean, at this point, we got about an hour and a half left to go in the trading session, so don't be overly surprised if we do give a little bit back here. But I guess there's the Greece conference going on right now. Let me say a few things about Greece, okay? So I can't say this for certainty, okay? I can't say anything about the market for certain with any kind of absolute certainty, okay? There's just, that doesn't exist in the world. But you have Greece with all these debt problems. They're looking to the Eurozone to bail them out, to extend their debt by, X amount of months. And Germany's balking at it. Eurozone, the rest of the Eurozone, maybe they're okay with it. Who really knows, okay? But at the end of the day, what politician have you ever seen that doesn't cave in to the squeaky wheel or to the person causing all the problems, okay? So you look in the United States with like entitlements, okay? Granted, there's some people who need the entitlements to get from one job to the next and, to bridge that gap. Are you, pro and con? That's not what I'm talking about here, whether that's, necessary or whether that should be on the taxpayer's shoulders. What I'm talking about is the fact that there's people who abuse the system, okay? And there's people who should be going out and getting a job and are very capable of it and are even passing up jobs because they don't want to actually have to go work and start, earning their living. Instead, they'd rather live off the taxpayer, right? Now, once again, I'm using like there's a group of people out there that do this. I'm not saying that everybody that's on entitlements are doing this. I'm saying there's a group or a segment of people that do this. Okay, the politicians know that, but do the politicians go out and say, "Hey, go get a job. We're cutting your entitlements"? No, they never do that. The reason why is because A, they want to keep their vote, obviously, and then B, they don't want to get themselves into political controversial matters, okay? It's easier to just let it slide. And that's basically what you're having with Greece right now, okay? Whether or not you agree with what Greece is doing, at the end of the day, Germany is going to cave into them. I could almost get, I don't want to, once again, I don't want to say there's absolute certainty because maybe they grow a pair and they actually hold their feet to the fire, okay? But I'm just saying, on the whole, when it comes to government shutdowns, when it comes to matters of principle, when it comes to entitlements, when it comes to these Greece bailouts, when it comes to anything that you would like to see a politician basically use some of their political capital on and maybe even take a hit because they're standing on principle, they never will. They just don't. They're trying to live to the next election. And that's what these people in Germany are ultimately going to be trying to do. They're going to be trying to live to the next election, to the next appointment, to the next polling data. So could there be some rough patches in between then? Yes, but I think ultimately the grease thing's going to be figured out. They're not going to default, at least not anytime soon. I think we see defaults happen, it's good because they were forced to. I mean, there was like just Mother Nature ordained it. Otherwise, you can expect politicians to cave in because nobody wants the blood on their hands for causing, economic global thermonuclear war. So that's my thoughts on that. So I haven't been like ultra. A lot of people are nervous about the grease situation. I haven't been overly nervous about it, and I've kept a bullish tilt on this market since for the majority of this month here. Well, that's that. So S&P 500, we're breaking out of that bull flag today. We managed not to fall to pieces when we intraday broke this support level here, most notably seen here on the 30-minute chart. Held that somewhat, and now we're breaking higher to new all-time highs. Another thing worth mentioning is on the Dow today. It hit new all-time high. So that's the first time, I believe, in 2015 that it has done that. Overall, the chart looks pretty healthy there. It doesn't have that look like we have seen back in October, and that goes with the S&P as well. It doesn't have that look of being overly extended. I mean, you look at what we did in October. I mean, that was a pretty good long rally, and we're nowhere even close to matching that in duration or length. If you look at the Russell, looks pretty exciting here. We're breaking out of that box. I have to keep extending this every time I do one of these, but yeah, you can see, I mean, it actually tested the very top of that box today, held its own, and is trying to push higher yet again. So Russell is actually very tradable. If you go like take IWM, you could get into this. You probably put a stop loss below 119.84. You can get in with about a less than a 3% stop loss and see where this trade will take you. So very, very nice trade opportunity there. Then you have the NASDAQ. Of course, what a lot of people are going to start focus on here, especially now more than ever. Let's see if I can pull up the monthlies. Right here. All-time highs on the NASDAQ is 51.32. We are getting pretty daggum close to that 51.32. So that could be something that's hit next week or in the week ahead if the bullishness remains in this market. But overall, I really never thought that I would ever see this 51.32 hit for perhaps another 20 years or so. And here we are in 2015. We are getting ready to hit it. And, there's a lot that has happened in the time from right here in 2000 on the monthly chart to where we're currently at today. Lots of fortunes lost, lots of money lost, and a lot of stories to be told. A lot of people during this time quit their jobs to become day traders, and they don't exist anymore. So that's what that little arrow right there brought for you. A lot of people who thought that they were good enough to quit their jobs, didn't know anything about risk, thought that the market was just a money-generating machine that knew nothing but to go up, and little did they know that story came and fell to pieces in early 2000s. So now we've pretty much recovered, massive double bottom on that NASDAQ chart, and we're getting ready to test all-time highs again. It'll be interesting to see how it acts once we get into that 5,100 level there. I know I'll be interested to see that. Individual stock plays that we are currently in. Honeywell up 2.5% here. I wasn't entirely sure how this thing was going to play out for us today, but as you can see, it has recovered very nicely off the lows. Still holding on to that 5-day moving average on a closing basis, and I think this is probably going to be one that we carry into next week here. Adobe has been a bright and shiny star in our portfolio. It's gone up basically about 8 straight days. I keep thinking there might be some kind of a pullback here, but we have yet to see it. If you look at it with the Bollinger Bands on it, you can see it's not outside the upper Bollinger Band anymore. So that's actually a good thing. I mean, because when it gets way outside the upper Bollinger Band and stays out there, sometimes you get some of these kinds of reactions where the price can't handle itself. So it's actually good to see it starting to march a little bit higher, but within those Bollinger Band parameters. Let's go ahead and get rid of those Bollinger Bands and look at MasterCard. Another trade, we got in this one at 86.29. We're currently up 4.8%. And for those wondering, up 6% on Adobe and 2.5% on Honeywell. But MasterCard, yeah, up 4.8%. Really no reason to get rid of this one yet. I mean, breaking out to new highs. Very strong day for it, especially with considering the open that the market had. This thing never wavered, continues to march higher, getting good volume out of it on the day today. Yeah, definitely a hold going into next week as well. And then Microsoft, this one's taken a lot of patience for me to continue holding it. But, you know, it was down for 2 days straight. Warden doesn't tend to correct the dividend payout. So we're actually up on the 17th. And according to news outlets right now, and according to what some folks are saying in the chat room, there is a deal reached between Greece and the Eurogroup financial ministers with a 4-month bailout. That's according to a official. So thank you, Desert Rat, for that. Desert Rat is one of the longtime members of the SharePointer Splash Zone. He does a good job of keeping his ear to the ground there with the news and the breaking news. And so we'll see how the market reacts to that. I think a lot of it's probably already priced into the day's move, considering the fact that the S&P rallied from 2085 at its lows of the day all the way up to 2107. And now we're basically sitting at 2105. So, you know, 20 points off the lows of the day. So MSFT, we get this little bull flag here going, and it never really said, you know what, it's time to sell this stock. It actually kept its act together, and you know, today you're getting a good move out of it. Now, I'd like to see it finish a little bit higher. Personally, I would like to see it close above Tuesday's highs, which would be like $44. If we could get a close over $44, maybe it's asking for too much at this point. That would be huge for Microsoft going into next week. Boeing, we got into this one on the 17th, got long on it for 149.84. Now it is at 158.20 or 58.10, and we're up about 5.6% on it. This one's, I mean, amazing chart. I mean, each day that the candle just keeps getting bigger and bigger. So who knows what Monday holds for it if it continues that kind of a trend pattern. I mean, this is a stock that's done extremely well over the past month. It had its earnings breakout, then it consolidated, and it's broken out again. So, I mean, really, it's not giving us any reason to sell the stock. And Lulu, I got into this yesterday. It was good yesterday when it was running, and then yesterday it just gave back out so much of its gains. I was very close to selling it yesterday at one point. I'm still in it now. I don't know if I'll hold it through today or not. It's really, I mean, Lulu has its ways of being, you know, a bit of a more higher risk kind of play, just because it has more of a tendency to have ups and downs, as do really any of the retailers these days, the clothing retailers particularly. But I mean, the chart's still intact there. I think it's going to be a lot of it's going to come down to whether or not I want to be 60% going into the weekend or 70% going into the weekend. And then finally, the last position is SWKS. And I swear, like, I got into this chart right before it just decided to go bonkers here. Essentially, the S&P, we got it. Let me pull up the S&P chart the S&P 5-minute chart. Right here. This candle right here was sort of my signal to get long on SWKS. Now, if you look at SWKS during that time, I got 83.30s or so, and it's, you know, like as soon as I got into it around here, boom, it just went. I hate using that word boom, by the way. Forgive me for saying boom. Hoorah! You know, it goes way up. It goes up, you know, quite a bit, and it flattens out for the rest of the day so far. So That's the gist of the portfolio right now. Overall, it's a pretty good, healthy portfolio. The S&P right now, so far, with some of the news that's out there, it's about 3 points off of the highs of the day, so not a huge concern there. Up 7 points on the day. Let's go over some trade setups that I have been watching. AUV, I think maybe the ship has left the port on this one, but you can see on a couple of days ago how it was just holding that support level there. Even I was a little bit nervous about getting long on it. Hindsight 2020, yeah, I probably should have gotten long on it. But that means I probably wouldn't have one of those other, good, quality trade setups in the portfolio right now. But overall, I mean, LUV, I mean, that's looking promising for it to go back up to 47 here. The ideal stop loss would have been below 42.23. Probably could have gone back. Yeah, I'd say like 42.17 would have been the stop loss just below this price level here. So since then, it's kind of like 240. So you're looking at more like a 6%, 5%, 6% stop loss. Probably a little bit more than what I'm willing to wager for a single trade. NUAN, semiconductor play, or I'm sorry, software technology play. It hasn't really come out of this triangle pattern yet, but it's definitely one to watch as we go into next week. It is just on the cusp of coming out of it. So be excited about this one next week, because this could be a nice runner. Just stuck right in that triangle pattern. And if it can get back above, let's say, if it gets back above like 14, 17, could be for a very nice trade. PWR. I don't want to say that's like a triple bottom. I don't know. I mean, it's kind of rising, so some people will say, oh, that's not a double bottom, triple bottom, or any kind of bottom. That's just a base. Well, I'm sorry. You know what? I think some people get a little bit too into the exact technicals of a pattern. This is basically a triple pattern here. Whether or not all the bottom prices are equal or not, it's essentially a triple bottom pattern. And you have some nice consolidation here, followed by a little bit of a pullback today. But yeah, if this thing gets back above 29.35, there's a chance that you could see 33s in the coming weeks. IP. I think of IP, I always think of Dunder Mifflin from the show The Office. But a beautiful bull flag here. Definitely a play as we go into next week as well, particularly if we sell one of the stocks today. I'm going to be probably looking to add another one on Monday with any strength the market may provide. But yeah, I mean, you can get into this thing at 57.34, and then probably put your stop loss below Wednesday's low. So 57.34 is an entry price, say 55.88 as your stop loss. You're not risking that much on the trade, 3% or so. VIAB, we actually closed this one out earlier this week. Couldn't get it to do anything for us. This day just was a little bit too much to the downside for me to weather. But yeah, it's breaking out today. Looks really good, really solid, and nice little inverse head and shoulders pattern there. So Apple, this thing it's kind of like Boeing, man. Adobe just keeps on marching higher. Best advice on Apple is just follow that 5-day moving average. It's been pretty reliable, pretty solid. If it closes below it, then maybe that's where you take your profits at. Tesla. Talk about this one. You have this inverse head and shoulders pattern here, and I think the risk is going to be such that I'm not going to be able to play it. But if you look at this inverse head and shoulders pattern, that's going to confirm here in the coming days at around, let's just use an old line here. It will confirm at probably around, let's say on Monday it confirms at 221.91. So let's say just 222 as a whole. Be a good entry price. The stop loss is where it gets really difficult. So ideally, if it can break out or just stay right below it and coil some to give us a little bit better of a idea of where to put the risk at, that would be better for us from a trading standpoint. So that's going to do it for today. If you guys have any questions, feel free to email me, Brian@shareplanner.com, or if you're a member of the Splash Zone already, hit me up there. I'm in there each day, every day, answering your questions, stock related and technical analysis, market thoughts. I give you it all. And we got a really good portfolio. I just went over the portfolio, and some really good solid gems in there right now. I hope you guys all have a great weekend. Once again, if you're interested in signing up for the Share Planner Splash Zone, you can go to shareplanner.com/splash zone. So www.shareplanner.com/splash zone. Y'all have a great weekend. Spend some time with family, and God bless you all.